How's it going, guys? Last time I covered my financial mistakes that I made and lessons I learned from my financial mistakes. This time we're going to be covering the financial lessons and the successes that I've achieved so far, just so you get an idea of what it's like when you actually start investing, what you go through. Because I've only been doing this for roughly a year, rounding it. So I want to give people that are new to it an idea of what you can do or what it's like or the lessons you learn. I'm not suggesting like specific investments or anything like that. That's not my job. I'm not here to give you financial advice. I'm just here to help you find financial literacy. So, how to save, how to budget, how to utilize your money the best you can. Not trying to sell you on any products, services, not trying to sell you on any stocks, nothing like that. We'll just get right into it. So, number one, even though I made 35 plus mistakes, which I gave you in my last video, no mistake would be bigger than not getting started for sure. Like, it's such a blessing that I started at all, and it's such a blessing that I started at my age. Best day is today. Best day was yesterday, whatever the saying is. It would be great to start, 5 years earlier, but the best day is today if you haven't. And I'm just glad that I did when I really needed to, when I felt that urge to. I didn't just keep ignoring it, like I said in my last video, for years and years and years. And then not only did investing teach me the importance of managing money, which is something that school doesn't really teach often, but it taught me responsibility, diligence, and emotional control. Financial security is bringing me clear mental stability. I'm no longer having to panic or be in like survival depression mode as sometimes referred to, because I finally have an understanding of what I need to do in order to be financially secure. It doesn't really matter that I'm not there yet. I understand the process, and that was really the whole survival mode problem. Like, sure, you could be in the cycle for however long, but when do you actually solve it, right? I can go paycheck to paycheck and paycheck to paycheck, but if it just takes one emergency to put me under, how do I get out of the cycle to actually be put ahead? And this was the answer. And knowing the answer is what brought me comfort, because I don't need to solve it immediately. I just need to know what the solution is. So it really brought me that emotional security, taught me the difference between panicking and just like accepting. Yeah, like I said, even if my account is only 30,000 right now, which isn't life-changing money, that's some people's life savings. I'm not going to say everyone's, but that's like a good chunk of people's life savings. It's not the money that matters, it's the knowledge. To be honest, it's really important. Number two would be it changed my perspective on feeling trapped, specifically with income. While I worked for others, I often struggled to understand my own value and who I was as a person and my value that I provided to society. Previous to investing, I would feel demoralized and not understand how to get further in my own life, but more so like on my own path. Like, am I starting a business? Do I go to school? Because everything kind of costs money, everything costs time, you're sacrificing opportunity costs. So it's kind of hard to make that decision. I make so little money per hour already, and it's money that I work long, hard hours for, just for the employer to make the profit. And then I would lose more to income tax, and then even more to inflation. And I could easily see how somebody could get stuck in this like rat race of a cycle, living paycheck to paycheck and hating their job. Yeah, and I couldn't see any other way out other than making my money work for me and compound for me. Don't get me wrong, I'm doing other things, and like increasing your income really matters, doing side hustles, as we're going to get through. There's a whole plethora of things you need to do besides just investing. Have diligence, not be spending your money like crazy, budget properly. Investing and the knowledge of financial literacy itself helped me to understand what money should be used for. It took me a really long time to understand that. For a long time, I was just spending money because I was losing it to inflation and tax and whatever else anyway, so why not get the full benefit of it? Terrible way to look at it. This teaches you how to actually make your money work for you. Money is a tool, it's capital, it shouldn't be consumed needlessly, it should be put to work, it should be used for something. When you have it, it's a benefit to you. It shouldn't just be sitting there, it shouldn't die to inflation, it shouldn't die to taxes, you shouldn't be spending it on consumable goods. You don't need me to preach these things, but these are things that I realized that this cemented for me. You know what I mean? These are the lessons I learned. It taught me how interest, especially compound interest, works. Taught me how to value my own money, because each dollar can be put to work and compound and be multiplied rather than be spent and just used and eaten in a bag of chips. I learned to save, how to fight taxes, inflation, and I learned how to create money for myself, make income for myself, have passive income. Those are really important things. Like, it's what gets you that step towards freedom. The three main concepts that suppressed my self-worth in the workplace no longer impacted me as much. And Canada's taxes are still absurd, My employer made more money than me, and inflation still exists, but I knew how to protect my money from inflation. I could effectively protect myself from taxes, and investing in companies made me understand some people deserve to be paid more. I just had to use my very minimal pay that I earn in a way that works for me and multiplies more. And number three is just saving. Currently, compound interest hasn't really been a factor in my $30,000 portfolio. 25,000 is from deposits that I saved with that same minimal hardworking earned pay that I was talking about. 5,000 was in capital gains. Not really any of it has been compound interest because it's only been like a year. So just imagine when compound interest kicks in and that initial deposit is really high, and then you're compounding every month that you put in consistently as well. So that compound interest eventually will skyrocket and I'll get a big benefit out of that. It just hasn't really kicked in yet. So it's taught me saving is a big one, because before investing, before multiplying my money and making it work for me and learning all these crazy things and studying balance sheets and, going through ETFs, it was having to learn how to save. It was having to learn how to have the money to do this in the first place. I was terrible at saving and I had awful spending habits. And I usually had an emergency fund of around 1,000 to 3,000, just like ever since I started working as a kid. So that was a pretty good financial habit that I had, but that probably only started right before COVID. So it hasn't been that long of it. It was probably a $1,000 emergency fund for all the years previous to that. It's just, if I had more than 3,000, it basically wasn't okay to spend it. Terrible way to look at it, right? Wasn't working for me. Investing completely changed everything about saving and taught me financial literacy and personal finances for the first time. Now I track my expenses, I price match, follow a budget, invest all my money when I get paid. That way I'm not spending it first. And I coupon to save. I could go on and on about the things I do to save money, to find the money to invest, but just giving some examples. I compare the value of every purchase to two things now. The first is my favorite stock holding price. When I go to buy any liability or consumable, I ask myself, do I want this item or do I want the same money worth in my favorite stock? Sometimes you can even compare it to the product you're buying. Like, do I really want this bag of chips when I could invest in Loblaws? Not financial advice. Do I really want this iPhone when I could invest in Apple? And again, not financial advice. But I'm just using it as examples, right? Like instead of buying the product, you could buy the company essentially. And then eventually you could buy that product multiple times over if you wanted to, but you won't want to when you see your money working for you. The second thing I compare a liability or consumable to is my hourly wage. If I get paid $17 an hour, why would I want to spend $17 on takeout food or other consumables? That's quite literally trading an hour of my life for some pointless item that is going to be gone in a moment that I don't need. I've always been a collector of things, as you can see on the back wall of the Pokemon stuff. If you're going to buy something, it should last, and it should hopefully go up in value, which is the idea of purchasing assets instead of liabilities. I wouldn't go out and just buy takeout food, for instance, right? I would consider that I could buy a better investment, whether it's stocks or ETFs or trading cards, even if I wanted to do a flip or something like that in the side hustle. It would be better to put that money there rather than consuming it. If I decide to make that purchase for the takeout food, I'm also falling into the tax and inflation trap. So I'm spending money getting taxed on the money that I already paid income tax on, and the product that I'm purchasing inflates every year. So I'm falling into the exact trap I'm trying to escape if I make that purchase. Number 4, investing taught me emotional security and discipline. I tend to argue less, get angry, or feel like I need to prove a point more. I've lived through some wild stuff, like Liberation Day dropping my net worth vastly, which seems small. Again, 30K is some people's average savings or whatever, but after it's taken the time to build this up, seeing things drop that hard can bring you emotional insecurity, and that's the point, right? Did I panic? Did I sell? No, I didn't. I got excited to acquire more. But that's the point. How do you react in these times when things get hectic in your life and they get crazy? And it kind of taught me to just be a little, like, take a breath, take a step back, be patient, wait, let the situation unfold, then kind of have your response. Think before you speak. You know what I mean? Like it really cemented like those things for me. which is not something that you expect to be taught through something like this, but it really does discipline you because it disciplines you in every way, right? Emotionally, financially, mentally, everything, right? Made me feel more confident. I can talk now. I'm still saying a lot and things like that, but I can at least speak now. I can be in front of a camera. I'm usually behind a camera. It makes me more confident just like talking to people because I don't have that trap of like what value do I provide to the table in the workplace or something like that. I don't need to feel like the only worth to society I provide is doing my retail job. I now feel like I have more worth because not only can I provide knowledge for people to understand this and that struggled with it the same way I struggled with it to understand it or to find how to get out of the cycle or situation or whatever, but also that I just have the clarity to know that I can get out of whatever situation it is and then keep compounding this regardless. Like, it doesn't matter if I get frustrated in a place and want to change my circumstances, I can still continue doing the same thing to keep benefiting my life. So it just made me a lot more confident. The next one is investing made me call myself out for bad habits, not just spending, but health wise. It's eye opening when you realize how much money, time, because money is time, you spend your time working for money, as we talked about. It is eye opening when you realize how much money you spend on products that are bad for you, and you can potentially take away more of your time or money, like processed foods, takeout foods, alcohol, or smoking. So when you really go through that budget and you scrutinize every purchase and you see the things that, like, not only is it financially bad for you, but it's also like unhealthy for you, right? It doubles down and double cements for you that like you got to fix some of these habits. So it helped with that. Investing taught me not to gamble. While I did have some small gambles that won or lost in my portfolio, investing taught me that there are safer ways to increase your money rather than going to an online casino like so many of my friends were doing. If every dollar spent gambling instead was invested into the S&P 500 index funds or global equity ETFs, then it compounds with interest and capital gains. All those gambling losses would have been better off, even if they bought and it went down and had a dip and, panic. After all the years, like, you still own something, it's still going up over time, hopefully. But yeah, they would have been way better off. And it really taught me not to gamble. Like, every dollar matters. I don't want to put it on a coin flip and give it to somebody else. Like, everything needs to be safe. And we're just trying to beat inflation. And that's the main goal. We don't need to be getting a coin flip and making 100 times on every single thing. Next one. Can't get back the time that you have now, the time you're currently burning. So if I didn't start investing in my 20s, I'd be paying the price in my 30s when living expenses are higher. And the longer you wait, the longer your opportunity cost runs, and compound interest has less time to be on your side. Your youth is your value because your time is your most valuable currency. So again, just starting today was a big one for me. It's not necessarily about age is my point in this one. It's about just like starting as soon as possible. Even if you're 40, you'll regret it in your 50s. If you're 50, you'll regret it in your 60s. Obviously, there comes a point, but I'm just saying that it doesn't matter what age you are. It's starting. It's, like I said, best day is today if you didn't do it yesterday, right? Investing in financial literacy taught me the importance of income generation, not just saving. Higher paying jobs and side hustles are mandatory for adding value to your portfolio consistently and to help you reach larger capital values quicker. You will reach 100,000, for instance, much faster if you also manage to find extra income to invest in between your paychecks. But yeah, you should be finding something to supplement your income over time rather than just your income from your employment itself. That's also one of your highest ways of getting taxed is employment income. So if you can find some way to make some money outside of employment, then it really bolsters your compound interest over time and your entire portfolio worth. I learned how to read financials and balance sheets, which helped me understand the importance of my own balance sheets. I learned to respect myself and not allow myself to get taken advantage for work, because I can create my own income now. If somebody is disrespectful to me or treating me poorly, or I'm being abused in the workplace, I'm getting taken advantage of at a workplace, I'm being overextended or whatever it is. I'm just trying to give like specific examples that somebody might be able to relate to. I don't need to stress about it because I can create my own income through side hustles and investing and interest, and that daily stress of that day to day of that power somebody else holds over you just disappears. The next one is creating a core portfolio of safer investments, I guess would be the words. We talked about in the mistakes video what I invested into first, and then I kind of re-rolled some of the profits into some more safer things. So now I'm very diversified. I'm very diversified without doing what we talked about in the mistake video. I'm not just buying a bunch of single holdings here and there. I have a core portfolio of ETFs, and then I have my stocks to supplement that I speculate on if I want to speculate on. Yeah, I got a core portfolio of ETFs, and that's really what I focus my concentration on so that everything is safer. And I'm glad I didn't make that mistake at the start and just keep chasing the mistake, go into options trading, go into whatever else it could have been, day trading or trying to buy single stocks and hold single stocks for however long, thinking they'll only go up. Yeah, I'm glad I rolled into safer things. Next one, I was pretty successful with the single stocks that I did purchase, mostly because I really researched them first. Like, I really researched the things that I invested into. I had a lot of time, days and days and days. Price didn't matter. I'm not worried dropping $5, $10, going up $10. I'm not in a rush to buy it. I'm not reacting to the price. If it's a good company, it's a good company, and I just need to do my due diligence to decide what it's worth and when I want to buy it. And I was able to execute that a couple of times, and those few really boosted my portfolio pretty high without sacrificing the safety of the core ETFs. Like I said, only 5,000 in gains. It's not like I'm out here, playing roulette with my full portfolio. I would just manage to put a couple $100 on some ones that I really, 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 really researched and really felt conviction about, or maybe even had personal experience with. Well, my majority of my portfolio, not literally 99 or 98%, was in ETFs. Almost every other single stock I've purchased, I've made a fairly significant gain on, like almost every single one. A few specific ones I decided not to get greedy on and sell at all-time highs, which worked in my favor. Like, I sold at all-time highs and they've never came down yet. That doesn't mean they won't go back up. That doesn't mean that it could have been amazing for the people that hold it long term. I just took the gains I needed and re-rolled them into something safer, right? Nothing wrong with taking profits, especially when you're only, putting a few $100s down because that's all you can afford and that's your whole bankroll. So if that's all you can afford, you may as well put it into something safer once you've made a little bit of gains on it, right? Even if it's only 20%, that's still beating the market by at least 10% on an average year, right? The vast majority of my speculative picks have made a pretty substantial profit, specifically in the Canadian small cap market, on the TSX, TSXV, and Canadian Stock Exchange. The TSXV is very risky. I honestly just recommend just staying away from it altogether. The other two are broad Canadian stock exchanges, and they're much more trustworthy. It's where all our big companies are listed, but on the TSXV, it's all the venture companies where they're just starting out, and you're basically funding their startup essentially, and it rides on them. It's a lot less trustworthy. It's where I got hit with that pump and dump. I did get a lot of gains there, but it's a lot more of a casino. You have to really, really do your research and find the needle in the haystack, and you're not just giving your money away. When picking safe haven investments, I've managed to secure a decent profit there too. Some of my Canadian bank purchases are up like nearly 80%. Onbridge was up like 20%. A whole bunch of ones were pretty good, because as we talked in my mistake video, I wasn't buying American assets. I was only buying Canadian. So a lot of the stuff that I purchased that I understood, that I had daily interaction with, my gas bill, my food bill, my phone bill, I understood these things and the price of these things and the value of these things, and compared them to everything about the company, everything. And I read the financials and I read the balance sheet and I researched the CEO, and I do everything in my due diligence that I can possibly do. And some of those ones took off pretty well too. Being greedy while others are fearful, and being more cautious when others are greedy. That's a big lesson I learned. When the markets are really scared, you gotta buy, you gotta be greedy. When the markets are really greedy, you gotta be a little more hesitant, maybe go with some safer investments. Put every dollar to work still, but put it in your ETFs, put it in your banks. Don't chase trends and FOMO and chase sectors like quantum computing and AI and cannabis and whatever. You got the point. The next one is starting a no-fee brokerage, such as Wealthsimple, Webull, Kraken. I honestly don't know the other ones. I use Wealthsimple. But my point is going on one of the ones that you don't have to pay $10 every trade like you do at the big banks. You can buy in fractional amounts, still no fee. There's so many benefits. I'm a huge advocate of just get on your phone and invest from your phone. Don't go like don't go to your bank, not financial advice. I've been using Wealthsimple for years now, and I barely put any money in the bank anymore. It's just pointless to me. Next one is starting a tax-free savings account. It would have been a mistake if I started with a registered account. I know a lot of people that made that mistake. Not really a mistake. They still have gains, is what it is. But they're going to get taxed on those gains, whereas I'm not going to get taxed on my gains. Like, at least they started, at least they're investing. I'm not knocking them by any means. Most of those people are further than me because they started earlier. I'm just saying that when I did start, at least I started with the account that was the most beneficial for me. So make sure you do your research before you just jump into it. Next one was always willing to learn, never feeling like I know everything. That was always a problem with me. Like I was just like, as soon as I get into something, it's like, I learned like maybe a year or two worth, and it's like, I know everything. I don't got to learn more about this or that or whatever. But now there's always and everything, always more to learn. You never stop learning. You never stop learning ever, especially in this. Like, you're gonna make so many mistakes, and you're gonna learn from them, and you're gonna have to apply them. And if you don't apply them, you're gonna learn again. And then when you win, you're gonna learn from the wins, and so on, right? So you never, ever stop learning. Next one, I learned the value of trying new things, developing new skills, and creating multiple streams of income. This is where aiming for the higher pay, doing lots of side hustles, trying everything, just seeing what you like, getting out there, doing things. I made a whole other video on that. Like, it really cemented that in for me. You just got to try things until something clicks, you know? Get that higher income, get that higher skill, get that higher education, get that knowledge. Once something clicks, then you're going to feel so much more comfortable and confident. And then the last and final one, I'm sorry for the long video, is investing taught me about positive and negative debt and leverage, which helped me understand budgeting and credit cards better, to utilize these tools to their fullest potential, making money work for me rather than the banks gaining the benefit from my personal money. That was a huge one. Banks have essentially been getting all my money all my life and getting to invest it and utilize it and get the interest off it and so on. Not anymore. Yeah, now it works for me. Sorry guys. No taxes, very little inflation because I'm constantly putting in. No banks using their money to benefit them. So that's all of it. That's all the lessons that I could think of and the successes from investing. Again, I tried to not keep it to, I did so good on this stock. Like, no, these are the lessons that financial literacy taught me. It's not just trying to shill my bag holding stocks to you or whatever, right? But yeah, I hope you learned something. Ask any questions you need in the comments. I'm getting more comfortable with these videos, so I'll keep doing more and I'll try and make them shorter. But yeah, hope you guys like it, and thanks for watching.